Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll and I'm joined by Bloomberg's breaking news editor, Louise Moon. Louise, good morning. Let's start with Aston Martin issuing another profit warning.
Yes, yet another one. So it's warned on full year profits. This is all part of this kind of long ongoing story that we've seen essentially since 2020. So the Canadian billionaire Lawrence Stroll bought Aston Martin in 2020 and he's been really struggling to turn it around. It's very debt laden. It's been repeatedly trying to raise money. There's been a series of profit warnings. They've tried to add more models. They've struggled to gain traction. Then more recently, they've been hit by tariffs. The US is Aston Martin's biggest market, and they've been trying to cut costs. So a whole host of things. And this morning is the latest profit warning. So shares falling on that slightly this morning, but then you look down, you look back at their past year and they're down about 50% over that past year. Bloomberg Intelligence in a note this morning was saying, now credibility of management is really on the line and some guidance is needed for 2026 to show what the path is going to be for things to become more positive, essentially, for there to be more positive cash flow. Full results are coming next Wednesday, so there could potentially be some guidance there. There was kind of one very small bit of maybe positive news. Aston Martin has agreed a deal with the Formula One team to sell the right to use that name for 50 million. So a slight bit of cash there, which analysts are slightly upbeat about, but overall they're worried about the debt, they're worried about the turnaround issues, and shares are falling on the back of that.
Okay, but I appreciate you trying to find a silver lining in that story as well. So thanks, Louise. Let's turn to the Irish building firm Kingspan next. Their shares up almost 8% in Dublin.
Yeah, hitting the highest since 2024 this morning. That's after record revenues. It was in line with expectations, but still record revenues. And it's all on the back of demand for data centres. So one of their units builds infrastructure for data centres, and it's essentially doing really well on the back of this ramping up demand as the use of AI increases globally, and people want those data centres and they need those facilities. So sales in that unit grew by 12% last year. They're saying there's an extraordinary pipeline, in their words, for that unit ahead, and that helped Kingspan offset what was kind of softer activity in their residential unit, so which is their other main segment. So shares, as I say, rose over about 7% and hitting a high since 2024.
Okay, and a quiz question. Whose diamonds are in the rough?
De Beers.
There we go.
Anglo. Exactly.
You've been looking at their results this morning.
I have. Yeah, so Anglo American had their results. The negative news is that they took their third write-down in 2 years on De Beers, which is their diamond unit. That's for $2.3 billion US. And it's all part of their, again, that they're in the middle of a transformation. So Anglo American have been trying to sell off De Beers as well as their coal unit and their platinum unit and focus on what are kind of the moneymakers, so copper and iron ore. They have divested platinum. They're still stuck with diamonds and with coal, which are proving harder to sell, and they're continuing to weigh on earnings. And as I say, they posted that write down this morning. The CEO said on a call with reporters earlier that he said, "I certainly hope that this is a low point." So that's the negative news. Overall, their earnings did do okay. So underlying earnings rose 2%. Profits of $6.4 billion. So it was okay. Shares actually rose. It seems to be that analysts are focusing on the bit of positive, and that's that they have agreed, they did agree a while ago a deal to buy Teck, one of the world's biggest copper miners. So focusing on that positivity going ahead and the push into copper despite that write down.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.